Did you fall for the United Health Group hype today and buy the stock? I did not. Here's why. After the close of the market yesterday, Berkshire Hathaway, Michael Burry, and others divulged that they had bought large stakes in United Health Group. Now, they bought these at least 6 weeks ago, if not further in the past. But because all the gurus on Wall Street want to sound cool on the financial news shows, what do? They say they bought it today. What then happens? A lot of emotional investors go in and buy the stock today. I am not sure. Emotional traders can move the stock market in the immediate term, but in the medium to longer term, what always drives the stock market? Revenues and profits, the direction of those. Well, let's look at the facts. Trailing 12-month revenues for United Health Group, excellent, generally coming up here every quarter. This is awesome, but United Health Group has a spending problem. If the revenues keep going up, and the 12-month trailing net income looks like this, that's not so good. Did not do well at all on net income in 2024. Was back up in the first quarter of 2025, but did not make a new all-time high, and then was down a little bit in the second quarter. So not only do I want to see increasing revenues quarter after quarter, but I want to see increasing net income quarter after quarter. That's not what we have here. Beware. I also don't want to buy a stock where in the immediate term, the underlying emotions are very, very exuberant in that stock, because what eventually happens? It snaps back. If you want to take a share of UNH here, I would probably give it a little patience, a little time. Beware. Another reason I'll probably stay away from UNH is because it's not part of the Magnificent Seven, and that is where the money is. And here is another way to prove that to you again. The ratio of equal weighted S&P 500 to the S&P 500 index itself has dropped to its lowest level since November of 2008, according to the Kabasi letter. Meaning, we are at historic levels of investors' money in the Magnificent Seven compared to everything else. It makes sense because the Mag 7 is where the largest increases in revenues and profits are taking place. In my opinion, any logical investor would have a lot of money in the Mag 7, and I know I do, so I'll probably stay away from United Health Group. The S&P 500 fractionally lower as of 2:29 this afternoon. I'm not surprised. Personally, I think the S&P 500 can chop sideways in the next couple days here while we kind of burn off some of that underlying exuberance before the stock market again makes its next leg higher up to brand new all-time highs. US oil reversing a lot of yesterday's gains. That's awesome. I will continue to hold my short crude oil positions here, at least until we can at least get an unconfirmed breakout above $64.42 a barrel. Until then, I think we can go lower, and I'm holding on. Natural gas up nice today. Yeah, off of its intraday high, but up nice today. The next bullish thing for natural gas would be an unconfirmed and then a confirmed breakout above $3.07 a cubic foot. Yes, I'm still underwater on my long natural gas position. Stay tuned, watch these levels. Gold kind of continued to chop around that $3,400 an ounce level where I said it could. I kind of think it does come up from here. I would love it if it came down more. My ideal purchase price here would be $3,320 an ounce to buy even more gold. Other than that, I'll hold on to the gold I own. I'm very happy. Over the last 2 days, I've been wrong that I thought yields could head lower, and I was also wrong to get out of my short bond fund position. It's okay. I did it at a fractional gain, so that's fine. But 10-year yield here higher over the last 2 days, which is initially kind of what I thought had happened. Then I changed my tune, and I was wrong. That's okay. I'm not always going to be right. As of 2:11 this afternoon, the 10-year yield making an unconfirmed breakout above 4.32%. If it closes above that level today and then closes meaningfully higher on Monday, that would confirm the breakout. That would generally tell me that yields can run higher. So I will just continue to pause on entering any long or short bond fund trade. I don't want to chase a trade. This is not investment advice. And if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.